Have a great holiday, Blaker.
Thanks, everybody. And you do the same, Dale. Happy turkey
Thanks,
gobble
man.
gobble day to you.
You too, Stell. See ya.
See ya.
Rest of the team. And Peter Bockvar, welcome back to F.A.C.E.
Morning, guys. How are you?
Okay, pretty good, Peter.
Good
Great
morning,
to have you.
Peter. Happy Thanksgiving to you. I'm going to check out and let you guys continue on.
Yes, you as well. Thanks.
All right.
So Peter, why don't we start with Paul's reappointment reaction?
Well, I mean, essentially, all they did was reappoint, the most dovish Fed chair we've ever had, but just so happened to be maybe a touch less dovish than what could have been with Brainerd. But the two of them have worked together since she was appointed in 2014. He came aboard, I think it was 2012. So there is a similar thought process. They've never disagreed in terms of votes, and I don't expect any
Well, they ought to get married then.
Course.
What do you think?
Yeah, well, they're monetarily married.
Okay.
I'm not sure they necessarily see eye to eye and everything else, but I think that the market's knee-jerk reaction of, oh, wow, Powell's reappointed, the Fed's going to get more hawkish. No, the Fed's going to stay on the same course that they've been. The only question is whether they speed up the taper or not, because that obviously got the Fed funds futures market in a tizzy, because if the assumption is that they do, well, then that speed ups the path to an eventual rate hike.
Okay, well, without the Fed doing anything, doesn't look like the 10 years headed to 2% yields here, Peter?
Well,
looks pretty good, doesn't it?
Yeah, I mean, I think it gets there. I do, though, think that it comes along with still a flattish curve, and that yields essentially rise across the curve. When the Fed tightens, the curve flattens. When the Fed is easing, the curve steepens.
Right.
So while it's easy to say, oh, yeah, the 10 year is going higher because inflation is running at high levels, it's easy to make that knee-jerk, sort of a response. But because we're on the cusp of a tightening process, you could get a rise in the short end that actually keeps along and somewhat tame relative to where you would think it would go otherwise. Either way, like I said, I still think yields rise across the curve, but possibly in a flatter process, which is what we've seen. The 530s curve is the flattest since March 2020.
Okay. And I think about this, Peter, the market thought there was a decent chance for Brainerd. And I know that all presidents, except for our prior one, used to be pretty apolitical with the Fed and not talk about the Fed and not lambaste the Fed. But, we do have midterms coming up next year. And so far, the current administration favorability isn't that great. Do you think there's, maybe some type of an arrangement that if we're going to have a stock market correction, that Biden would prefer to get it out of the way earlier in the year and have the market recovering into the election than have the market continue to roll into, first quarter or so and then sell off into the election?
Well, I don't think any politician, well, first of all, I don't think there's a market sense within the administration even thinking about these things.
At all. Okay.
But no politician wants to see bad news in October before a midterm election. I mean, Lehman went bust 2 months before the 2008 election. When McCain lost to Obama.
Yeah,
now, I'm not saying that if Lehman didn't go bust and we didn't have a collapse in the markets in September of 2008 that he would have won, but no one wants to have that kind of timing.
Well, that's what I mean. Wouldn't it make sense for him to, be a little bit more aggressive about the taper and get it done earlier than stretch it out?
Yeah, well, even if they got it done in June, whether it's 6 months or 8 months that it takes them to do this, it's really not going to make the difference. I think the question is, because when you think about QE, the only thing QE has done is goose asset prices and monetize U.S. debt. There's no real economic impact outside of, if you can try to tell me where interest rates would be without QE, I don't know. But the real tool in order to deal with inflation is going to be what they do with the Fed funds rate, not with what they do with QE. So on one hand, you can argue, yeah, they should. I mean, I think they should end the taper today with the inflation we're seeing, because they need to be more flexible with respect to the Fed funds rate. But of course, the Fed doesn't behave like that. They go slow when they tighten. They go fast when they ease.
Yeah. So I have a question that I'd like to ask you. The dollar's been on a tear. Okay, so the whole world came in bearish a dollar early last year. What do you think is behind this? Is it the best sturdy shirt out there? And when you look at it long term, could this rally possibly peak in the next several months? And would that be in the U.S. interest to see a weaker dollar? And I believe it would be an interest for people who are invested overseas, right? So is a stronger dollar hurting EM, bond markets, and stock markets, and basically everything outside the U.S. suffering with a strong dollar?
I mean, I like to look at the dollar individually in terms of different currencies that it trades off. It's trading well. It's traded well against the yen. I think a lot has to do with
yields,
the rise in energy prices.
Okay.
And Japan imports almost all their energy needs, especially since they shut down most of their nuclear reactors after Fukushima. So they're constantly exchanging yen for dollars in order to pay for all these energy imports. So I think that explains mostly the weakness in the yen. The weakness in the euro, well, that's somewhat easy now, because if the Fed is about to start tapering, they'll be doing it at a much quicker pace than the ECB, which we know is dragging their feet. The pound sold off on the day that the Bank of England punted on an interest rate hike, even though I still think they're going to do it in December. But you look at the dollar against the Canadian dollar. Yeah, I mean, the dollar's rallied a bit here versus the Canadian dollar, but just back to a level of September, and 127 here against the Canadian dollar. We got as high as 145 in the crisis last March. So is that really a rally? Well, it's sort of more of a dead cat bounce. Mexican peso, yeah, it's kind of stuck in a range. I mean, it's busted out here a little bit, but just back to where it was in March. But the peso was almost north of 25 last March. So yeah, and the dollar, yeah, it's rallying against Turkish lira, but that's because it's the Turkish lira. So it's a knee-jerk rally based on the market pricing and more rate hikes quicker than not. I don't really think it's anything more than that. And again, I think it's somewhat idiosyncratic depending on which currency you happen to be in. The dollar trades somewhat poorly against the Chinese yuan. Chinese yuan trades great with all the trouble that people think that China is in, particularly with their real estate market. So I think you have to really just look at what currency the dollar is trading off. And if you look at the broader DXY, which is 70% yen and euro, so it's not really actually broader. But it's in the last 5 years, it's averaged 95.3, and today we're 96.7. So we're really not that much different than the 5-year average. So I just think that while there's no doubt that the dollar rally has taken people by surprise, well, some people have been bullish on it. I just think we have to put it in context. That's all.
Okay. We're getting a nice little reversal. Maybe some news came out in the euro, which has been the weak sister. Who's sitting on the gold, Peter? I know a lot of people were looking at this breakout a few weeks ago, this breakout, right? And Powell's renomination and a false breakout in gold. Similar situation in silver. We had a head and shoulders bottom, looked like a breakout, negated the breakout, and here we are. Silver actually holding up a little better than gold. Do you think this pullback that we're getting right now could be the last bus stop, or has the picture changed in gold? I say gold has to hold 1760, or we may even attack these lows down here. What do you think?
Well, I think a lot of the ebbs and flows this year in gold and silver have really coincided with the market's perception of what the Fed is going to do.
Okay.
So if you look at in mid-June, gold topped out and rolled over when the Fed said they're talking about tapering.
Right.
And then you fast forward to the meeting in first week of November, gold bottomed when they continued to call inflation transitory. People realized, wow, these guys are going to be really slow in pulling back. And then gold, of course, has sold off the past couple of days with Powell obviously getting re-nominated, Governor Waller saying that, and Bullard, who votes next year, saying that we may have to speed up taper. So it's whatever the Fed has done, gold sort of has traded up. But I think there's some short memories here of people trading gold, because in the mid-2000s, Greenspan raised the Fed funds rate from 1 to 5.25, and during that period, gold doubled. And just look at the 1970s, where gold and interest rates went up basically hand in hand because inflation was running faster than the Fed. And I can almost guarantee that inflation is going to run faster than the Fed. So I think that's just the knee-jerk algo response right now to the change in gold. Real rates still remain firmly negative, of course. Now, granted, the dollar has bounced, but in the context of a sharp dollar rally here, gold's actually trading okay. You'd think that if gold was,
it was resisting.
It was more sensitive to the dollar. It's really been more sensitive to expectations of the Fed and less so of where the dollar's moving.
Yeah, more about yields than the dollar. That's what people price it as competition, even though, like you say, real yields are still negative. They're not as negative.
Right.
So who do you think is doing the selling, Peter? I mean, China's pretty committed to deleveraging and trying to tamp down on inflation. They're one of the biggest gold buyers over the last decade. Could they be behind some of this gold selling?
No, I mean, I think
you don't think so?
No, I mean, I think it's just positioning. It's
okay.
Hedge funds just puking it when they think the Fed's going to be hawkish, and buying it when they don't think they are. When they're going to be dovish. And
are you glad I didn't ask you the question about comparing gold's performance to Bitcoin? I've seen you field it a few times here. I thought you might be tired of it. So
well, the way that I answer that is that I feel that they're soulmates in the sense of you're a bull on Bitcoin because you see what's going on in the monetary world. You see what's going on with the expansion of central bank balance sheets and the ability to print money in an uncontrolled way, and you prefer an asset that has limited supply and blah 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 blah. So I do have a problem with those that say somehow Bitcoin's going to replace gold. I think that's just absolute nonsense. When something's been around for 5,000 years, it's not replaced by something that's been around for 13 years. Because when you're around for 5,000 years, you've been through a lot. You've been through world wars, hyperinflation, deflation, monetary craziness. You've been through this, you've been through that. You've been around for 13 years. All you've been through is a massive expansion of central bank balance sheets. That's
well,
it.
for me, Peter, that was when I was bar mitzvah. So I became a man that day. So
That's right.
At 13, so I'd been through a lot. Braces and spin the bottle and
imagine,
all that.
Yeah, I mean that is a true test of metal. More so than if you were around for 5,000 years.
Yeah. So maybe 22 is the year. It sure has taken a lot of patience to stick to your guns in this market, and I think we need a turn in the dollar, including the Dixie. And
I agree. I mean, right now, just from a pure technical standpoint, you just look at the RSI and the Dixie, it's pretty stretched. The daily sentiment index in the euro is about 10.
Yeah, I saw that.
So
nine. There was a 9 reading.
Yeah, 9. Yeah, so you're getting close to at least short-term overbought condition in the dollar index. So
yeah, you probably sell the dollar, and the PCE may be the trigger for a reaction. What do you think? What are you looking for there?
It could be. The PCE is a little less exciting because you already saw the CPI a couple weeks ago. So usually when PCE is typically around expectations, give or take a tenth. Again, because we've already seen CPI, which was quite a surprise to the upside.
Okay, Peter. And I hope we don't have to wait 5,000 years for the next bull market in gold. And
yeah, I hope that's the case too.
Yeah, and $1.25 disturbing. Okay, I'm just showing everyone this is Peter's blog website, and I recommend that you guys go there to bookreport.com, BOOCK, and keep up with what Peter's saying. And I tell you, with all the interviews you do, you're a very patient guy, Peter. Because you get asked a lot of the same questions. You've been patient with positions, and most importantly, you've been patient with me through all the years.
I appreciate having me on.
I hope you and your family have a great Thanksgiving and a nice holiday, Peter, and that one of your best years is right in front of you.
Yep, and to you guys as well. Thanks so much.
All right, Peter Bockvar, everyone. You could follow him on Twitter at @PBockvar, and go to Peter's website to keep up with, there's a reason that he's on every form of financial medium. It's because his insights are pearls. So go here and check out what he's saying. And that's going to be a wrap for us. I want to wish everyone hearing my voice that celebrates Thanksgiving a great holiday. Tell the people you're close to how you feel. They're not mind readers. And above all, and should be Thanksgiving every day, but I know we get caught up in things like pulling pips out of the market. So don't just count those, count your blessings. And Stephen Sell will be with you Friday, and I'll see everyone back here again, God willing, on Monday. All right. Thank you, guys. Good hunting the rest of the day. Thanks for your attention and your support. And now go and subscribe. And I'll see everyone Monday. See you, Laura, Simon, Galaxy, everyone. Appreciate you guys.